Okay guys, I want to cover some key levels. We are teetering on a key support level right now. We are below that point. So I want to pay attention to see where the next daily candle open is, whether we're above this line here or below. Below will be bearish. Daily open above means we could see some upside. So I want to make sure you have those key targets. Guys, you want to get into leverage trading, three exchanges I use and trust are CoinCatch, BingX, and BitGet. All those links, if you want to sign up, are pinned in the first comment and description. CoinCatch is no KYC. Some states in the US, you do not even need a VPN. BingX up to 150 times leverage. And BitGet is also a well-known trusted exchange that I use. If you want to learn how to trade on BitGet, remember all the exchanges, they stay. So once you trade on one, you can trade on them all. This teaches you how to open a long, open a short, set a stop loss, trigger orders, all that. I'll link this video now if you want to check it out. So in the previous video, guys, I told you to long this blue ring. I'll link this video now if you want to check it out. I said I would definitely be longing that blue ring. I gave you different options, different ways to play it. So you could wait until we drop down, long that point, or wait until we push back above this orange trend line. Remember, these three yellow, orange, and red trend lines are very important macro trend lines. But I said to go long. We did wick down a bit, but we did end up pushing up from that point. So do watch this video. I did cover this in detail. This is just a published version of that chart. It says D1 simple blue ring bounce, just to show you how this played out. You can see we did get this little scan wick, which I said was very possible. Notice we pushed back up and we're just bouncing on this line. And in Discord, you notice we got rejected here. I made a post in Discord. This was on July 1st. See, we're at critical resistance. As I said, based on the macro trend lines, this is the point to short. So I was saying, look, we're right here at 63K. 63.8K. This is that yellow macro trend line I told you is very important. Notice if you were along this point, that was about an 8 to 9% move. And notice we got rejected here, the central Bollinger Band on the daily. And I was just showing the macro, showing why these three lines are so important, which we're going to cover in detail. So again, I gave you your point too long. If you watched the last video, you should have longed once we push back above the ring, or wait until the bottom of the wick to long. But again, that was a pretty good move. We pushed up what? Yeah, that was over 9%. Your point to short was 63,900. Now we need to pay attention to where we're currently at. So if now this is what I'm watching right now. I'm waiting to see if the next daily candle open. Let's see, that's going to be 8 hours and 11 minutes, guys. If we push back above, so just like you see this wick right here. Let me show you right here. So just like this wick right here. This could be the same thing. This could end up as a wick. We push back above, and your key resistance will now be up around, depending on the contact, about 64.4K. If we get a daily open below 60,600, then that orange trend line is not going to be resistance, and to me that is going to be bearish. And it looks like we're just bouncing down this blue ring. So your next key support level to potentially long is going to be around 56,900. Let's just say 57K. Down to possibly 56,000. I would long every time we hit this blue ring. That being said, as I mentioned, every time we get below this orange trend line as resistance, all right, if it flips as resistance, historically looking back, we always get a major drop. And I can just show you this one more time. Again, this is a point I said too long. I said, go back and watch that video. I said, watch for the scam wick. But once we push back above, you'd want to go long around 59,800. Your point to short. You can see how important of a line this is. We hit that literally to the dollar and got rejected. And now you can see we are holding just under this point right here. So if we get a daily open below 60,600, 60,500, to me that means we are headed down to potentially 56,900. By the way, guys, I don't typically ask this, but when I do, you guys actually do hit the like. So if you want to do me a favor and press that like button, I'd really appreciate it. It does help with the YouTube algorithm. So let me just show you one more time why this is so important, at least to me in these charts. Now, I have told you guys, and look, you can see for yourself, every time we cross one of these blue rings, yes, we got a pump. We crossed it here, we got a pump. We crossed it here, we got a pump. We did come down, and we crossed it here, we got a pump. We crossed it here, we got a pump. And you notice now, these rings are just markers for a move. It is very possible we could hold and continue up. We could be in some kind of pattern right now. And it's also possible that, this ring is an indicator of that was the top and it's time to come down. But we still have some key levels to pay attention to we're currently holding now. But I just want to make it very clear why I said that orange line is so important that we stay above if you're bullish, and if we get below, get bearish. Again, this orange line was resistance. resistance. All right, you can see once it was support, once it flipped out as resistance, we had a major drop. It was resistance, pushed above it, held as support. What happens once we broke below it? It became resistance, major drop. We pushed above it, it became support, we pushed up, and you can see right here, and this is what I mentioned in the last video. I said be careful because we could get a wick before pushing back up, and I mentioned it right here. Notice we got this wick, came all the way down, pushed back above as support, and then we broke below it. So as you can see, every time we break below this macro orange trend line, we have a major drop. So that means, same thing guys, we are teetering on this line right now. So if we get a daily open, and yes, it is looking bearish, but again, it could be a wick. We could wick right above. So I guess one way to play this, let me get a price label here if I can find it. Let's see here, price label. So look, if you're already short from here, if you're a member of Discord, you should have been short from 63,800. If we get a daily, say that this is just a scam wick, all right, and we push back up, wait to go long until if we push back above, all right. So right now I would already be short from 63K. I would not open any positions right now. That would be very risky. If we wick back up above 60,600, go long at least up to 64,354. We start holding above 64,400 around that area, depending when we make contact. If we hold above that, get super bullish, at least up to around 70,800. Remember, once we break above that point, we're breaking out of this larger structure, and that means we're going much higher. But these are your key levels. If we get a daily open below 60,674, then it's more likely that we're headed down to this blue ring. It's double confluence, guys. We've got this blue ring. Every time you see, we're just bouncing down this blue ring. Support, support, support. So we'd come down, hit it again, and you'd get a bounce. That means your resistance would now be around 61K. That'd be the point too short. Obviously, if we came down and did something like this, which I do expect, if we continue down, we will catch a bounce around 56,800 to 57,000. But that will be bearish because that means now we're below this macro orange trend line that historically every time this has become resistance, we get a major drop. That means this blue ring was an indicator that that was the top. And obviously once we're below 57,000 and this becomes resistance, guys, it is game over. And I've shown you why those, just all you need are those three macro trend lines to get an idea where we're at. And you can see this red trend line was a lot of support, a lot of support, a lot of support. Once we broke it, we dropped. So all three of these lines, again, were below the orange line. Your next point to scalp along would be 56,894. Up to, again, that orange trend line, which is around 60,671. Again, I would start to get bullish if we do hold above 60,700. Again, could be a scam wick, just like right here. But right now, I'd be very cautious opening any trades. We could drop all the way down 56K. I do point too long, at least back up to 60,900. But if you're waiting too long, wait until we get back above this point. But your point too short was here. If you remember Discord, remember if you want to get access to these live charts in Discord, you can't sign up. The website is opticalartcrypto.com. That link is pinned to the first comment description. Since it's July 4th, guys, I'm having a special at least through July 4th. So if you want to take advantage of that, just make sure you email me through the website. If you do sign up, make sure you email me through the website, get access to Discord. So just to recap, guys, this is also the weekly. Just want to show you really quick. We did get a bounce on the weekly right here at 59,000. And remember, green means long, guys. You can see we got a bounce right here at 59,351. So we could push up from this point. That's just confluence, guys. 59,000 on the weekly. This is that blue ring. You can see we got resistance, pushed above it, and we're just bouncing down it. So 59,351 we held there. And again, we could push right back above 60,671. I don't repeat myself, but just to make sure you understand what I'm saying, all right? As long as we're, right now, I would not open a short or a long. If you're already in a short, hold your short. But if you see it start pushing back up and hold above 60,671, then I would go long. Keep in mind, this is the center Bollinger Band on the daily. That's right at 63,000. That could be resistance. That's probably where the Bollinger Band will be at if we do push back up. But those are your key levels, guys. Watch to see if you get a daily open below this orange trend line. That will be bearish. We could get a long. We could get a bounce. Every time we hit this blue ring, we do bounce. So I would long again, we could come straight down to 56,900. That'd be a point to long. If it's a few days out, I would long 56K. But I would get the hell out if we get a rejection around 61,000, because that macro orange trend line, again, every time we're below it, we get a massive drop, and that looks like that could play out. We are below it now, so I pay attention to that. Let me give you your key levels, and this is just a little confluence, guys. This is the H1 chart. I just went in and just found our most key resistance level, or actually key support levels, and pulled them out. You can see that this is a very strong level here. Make it a different color so you can see it. Let's make it a yellow. You can see this line, all of this support. So we know that that is an important level. And just to give you that target, and I'll give you the targets below. So the next key levels I have are these white trend lines right here, outlining the fib channel lines. So those are your levels to play on the hourly. So again, those levels, just to show you a little confluence. So if we come down, you're looking at 58,382. Next point is around 56,500, and then your most critical level will be 55,000. And against upward angle, depends when you make contact. And your most critical resistance levels now, well, your current level you're paying attention to right now, current resistance on the hourly, those labels are huge, 60,500. Very key resistance level is going to be 61,800, 62,000. And then this fib channel line in this direction right here, a lot of confluence from 63,800. So pay attention to this target, but most importantly, again, the D1 chart, again, right here, this macro trend line right here. If we get daily open below this point, 60,670, that's going to be bearish. If this wicks back above, and this was just a scam wick, then I'd be bullish up to 63K to 64K. If we get above 64K, guys, that is super bullish to me, and we could potentially be off to the moon, or at the very least back up to the top of that pattern we're in right here. Let me zoom in really quick. So again, that means that we could be pushing back up, all right? And this is the pattern we're in. So we could just wick right back above, maybe get rejected, come test this again, push back up. But if we break above this level here, so around 71K, 70,800, we hold above that, well, we're off to the moon. But again, if we're below this line and we start coming down, we could get a bounce. More than likely, we will get a bounce. Every time we hit that blue ring, we do bounce. But if this becomes resistance, I would start looking for short entries to hold. And obviously, once we get below 56,800, guys, it's game over. We're headed way the hell down. Again, if you're leverage trading, 3 exchanges I use and trust are BingX, CoinCatch, and Bitget. All those links to sign up are pinned in the comment description. Remember, guys, have a special through July 4th. If you guys are celebrating July 4th, have fun, enjoy yourself, be safe. And guys, if you want to leave that like, I would appreciate it. I'll try to get up maybe a video on the 5th, and we'll see how this plays out. That's it, guys. Trade safe, trade smart. I'm out.